Investors' hopes were rejuvenated on Friday morning as the Fed announced that they were open to additional rate cuts this year. But China decided to rain on the parade, intensifying the never-ending trade war.
The markets were rallying into Friday last week, but they ultimately ended the week negative, as the S&P 500 was down about 1.4, the NASDAQ was down almost 2, and the Russell 2000 was down over 2%, and now the Russell 2000 is only up 8% for the year, while the S&P 500 is still up over 15%. Foreign and emerging markets were positive last week though, with foreign markets up just under 1%, while emerging markets were up just under 0.5%. And now, foreign markets are almost up 10% for the year. Today's chart that we're looking at is the S&P 500. And the S&P 500 has been in an uptrend, which is the diagonal blue line going right through the middle of the chart from January of this year through August. Now in August, the S&P 500 actually broke down below this uptrend line, and now it's been trading in a wedge for the whole month of August. And this wedge chart pattern that the S&P 500 has been trading in for the month of August is known as a bear flag. You can see this chart pattern at the far right of the screen. Now the bulls really want the bottom of this flag to hold, and that's right around the 2820 level. And if this does happen, the bulls want to see a bounce back up above the top of the flag around 2940 to then see a move back up ultimately to the all-time highs that we saw earlier this week. But if this bear flag pattern is confirmed, we could see another move lower on the S&P 500. And there are two technical levels that we're watching to the downside. First, the June lows around 2750 on the S&P 500. And that's the most important level to the downside that we're watching here. Because after that 2750 level, there's not much holding the market from a bigger drop down to around 2500. And a drop down to that 2500 level for the S&P 500 will give back almost all of the gains that the S&P 500 has seen so far this year. So it's very important first off that we hold this 2820 level in this flag to continue to see a move up to those all-time highs that we saw earlier this year.
To start the news off from last week, we wanted to recap the crazy day that was Friday. Friday morning, the Federal Reserve Chairman, Jerome Powell, had a press conference at the Jackson Hole Summit, and there he stated that the U.S. economy is currently in a favorable place, but faces significant risks. And that since they cut rates in July, additional risks have been added to the U.S. economy, but also reiterated that the Federal Reserve is committed to doing whatever it takes to continue the current economic expansion. After he had this press conference, the markets were up around 1%. Essentially after that, all hell broke loose, with China's news and a plethora of tweets from our president. China announced an additional tariff of 5 to 10% on $75 billion worth of imports from the United States. Also, increased auto tariffs to 25%, put a 5% additional tariff on soybean imports, and finally, a 5% tariff on crude oil, 3 of the top imports into China. After that, President Trump fired back with no mercy, increasing tariffs on $550 billion worth of imports from China. He increased current tariffs and also moved up the deadline for additional tariffs from December all the way back to September 1st and October 1st. Now on the bright side, the news story that was buried by Friday's craziness is that the retail sales numbers from both Target and Lowe's were awesome, showing that the U.S. consumer is still spending and still remains strong. And it's important to note that the U.S. consumer is still the backbone of our economy.
There's not a lot of economic news coming out this week, so we'll be paying attention to two things. First, if there are any new developments on the trade war with China, and next, any reactions to what the Fed came out and said with their decisions on Friday.
Thanks for watching. If you're on Facebook, please like and share our video. If you're watching on YouTube, please like and subscribe to our channel.